Hello traders, the title of the video is Currency Correlation, how to day trade using currencies correlations like a pro, part 2. Have you watched part 1? Alright, because it's very important for traders to watch part 1 before watching part 2 so they may understand everything that we are discussing here. I have also mentioned to traders that they should check out the video that we title talking about currency correlation trading tactics. Alright, so we want to day trade and we want to use currency correlation. In part 2 we want to use what we call lagging a price structure. Alright, what do I mean by lagging price structures? Probably you have already heard about lagging technical indicators, like a simple moving averages are lagging indicators because they don't go very fast. We talk about MACD also being a lagging indicators, but there are advantages of using lagging technical indicators. Technical traders are very obsessed with leading technical indicators, but there are many advantages for using lagging technical indicators. But today we are not talking about lagging technical indicators, we are talking about lagging a price structure using currencies correlation. So let me explain myself one more time. This is going to be more about a theory. All right, so we know that the euro dollar currency pair is positively correlated to the British pound US dollar, is also positively correlated to the Australian dollar US dollar currency pair. All right, so when the euro goes up, all right, we will expect those two currency pair also to go up because they are positively correlated to the euro dollar. But sometimes we can observe what we call a lagging price structure. What is happening is that, for instance, because the euro dollar is the leading currency pair, it may go up first, all right, may go up for many hours, but those other currency pairs that are positively correlated to the euro dollar will not go up at the same time, which means they are behind, they are lagging. And if you check their price structure may be lagging. Again, one more time, let me explain again to you what I meant by lagging price structure. In the first video, we were talking about euro dollar exhibiting a bearish chart pattern, and British pound, US dollar at the same time exhibiting also a bearish chart pattern, or the Australian dollar US dollar that is also positively to the euro dollar is also exhibiting at the same time a bearish chart pattern. So there is no lagging price structure here. But sometimes, as a day trader, you will notice that there will be a lagging price structure, which means the euro may exhibit first the bearish chart pattern. All right, so you will check the British pound US dollar or the Australian dollar US dollar, all right, to confirm, all right, the correlation between those currency pairs. So you will be expecting them to exhibit also a kind of bearish chart pattern at the same time, but you will not see it. So you look, you say, wow, euro exhibit a bearish chart pattern, all right, British pound US dollar did not exhibit anything. I can't see any. Don't invert it. It's not there. All right. Or British pound continue to go up to do something else that is completely different from what the euro dollar is doing. So in that case, we will talk about lagging price structure. You need to be very careful. Sometimes those lagging price structure provide excellent signal for us that because the euro is ahead of everybody, all right, we will now keep our eyes on those who are moving slowly, those lagging currency pair that should normally go up at the same time with the euro dollar. They didn't, so they are behind. So we keep our eyes on them, monitor the price structure, and sometimes you'll see that slowly but gradually they will follow the euro dollar, which is the leading currency pair. So as I explained to you, this is going to be a bit of theory. I will be recording another video when we will be demonstrating that in a live chart. All right, how we can use a lagging price structure for currency correlations. All right. Another example will be that the euro dollar may exhibit, for instance, a bearish chart pattern. Okay, so then you go and check the dollar Swiss franc that is negatively correlated to the euro dollar. You'll be expecting the dollar Swiss franc to exhibit a bullish chart pattern. And here, surprise, surprise, the dollar Swiss franc also is exhibiting a bearish chart pattern like the euro itself. What's going on? So the correlation is not yet in place. And then the euro start going down, but the dollar Swiss franc is not going up. What's going on? Sometime, this is a clear indication that if the euro went down for some time and we did not see the dollar Swiss franc going up, we can keep our eyes on the dollar Swiss franc. Probably it's behind. Sometimes it's not behind. Sometimes the correlation is not going to take place. All right. Sometimes they may do exactly the same thing, though they are negatively correlated. But when we are talking about lagging price structure, the euro in that particular case may go down first when the dollar Swiss franc is doing all kind of things that is not confirming the negative correlation. And then as we are monitoring the structure of the dollar Swiss franc, surprise, surprise, here it is start going up. So there is what we call the lagging price structure. Or the euro may exhibit first a bearish chart pattern. You look at the dollar Swiss franc, you do not see any bullish chart pattern. Few days later, surprise, surprise, the dollar Swiss franc exhibit now a bullish chart pattern. But not at the same time when the euro dollar was exhibiting the bearish chart pattern. All right, so you say, well, this is a bit lagging. The euro did exhibit a head and shoulder chart pattern. The dollar Swiss franc did not exhibit an inverted head and shoulder chart pattern to confirm it at the same time. All right, but now 2 days later, here we have the same. We have an inverted head and shoulder chart pattern for the dollar Swiss franc. Now the dollar Swiss franc is confirming the negative correlation. Or you may see, okay, the lagging price structure, talking about two currency pairs that are positively correlated, talking about the euro dollar, the Australian dollar Swiss franc, the British pound Japanese yen, the British pound US dollar, the New Zealand dollar US dollar, the Australian dollar Swiss franc, especially the Australian dollar Swiss franc. Very often you may notice the lagging activity with that currency pair in comparison to the euro dollar because it's positively correlated to the euro dollar. All right. So talking about the lagging price structure, we can play with it again with the economy news. So that will be the third part of this series of video when I will be talking about economy news, how we combine economy news and currency correlation. But in this second part, we are combining a lagging price structure with the currencies correlation. All right. So the same strategy will apply. We go to the daily chart. All right. We check a specific chart pattern for the euro dollar. All right. And then we make sure that chart pattern is formed at a key level or at a monthly chart key level, as I told you in the first part of this series of video. That's why you have to watch it first. All right. And then if the euro is going down, all right, we will check other currency pairs that are positively correlated to the euro dollar. If they are lagging, we wait until they show a kind of bearish chart pattern. Once we see that, because the euro already went down, they are likely to follow suit the euro dollar. And surprise, surprise, the correlation is now back in place. But on the day where you were checking it, when the euro started going down, the correlation was not yet in place. Those currency pairs were lagging, whether they are positively correlated to the euro dollar or negatively correlated to the euro dollar. But as a day trader, we can take advantage of those lagging price structure. Is that clear enough? Am I speaking with my beautiful American accent? All right, this to make you laugh a bit, okay? All right, so this is it. So apart from the daily chart talking about lagging, okay, price structure, for that particular case, you can play it as a day trader directly on the hourly time frame. So you see very often on the hourly time frame. But do not forget that we want trader to use daily chart. As I told you in the first video, I'm referring all the time to the first video, all right? Daily chart, hourly time frame, 10-minute time frame. You are day trading on the 10-minute time frame, yes or no, all right? Okay, but for the lagging price structure, combining the lagging price structure and the currency correlation, I want to say to traders that they can use also the hourly time frame. So you can go directly to the hourly time frame, playing with the lagging price structures. You may see sometimes euro exhibit a double top, or the euro goes down, it's from a bearish chart pattern and then went down. And the British pound US dollar is still consolidating, doing all kind of things. And surprise, it also formed after a while on the hourly time frame, a double top, and then it goes down. Now, why am I saying that you can play for this particular case, lagging price structure on the hourly time? The reason is sometimes, London is open, all right, and the economy news are released. Now, I need to be careful not to talk too much about economy news in this video because I'll be talking about it later. And the euro may do something, all right, during the London session. But as the euro dollar is doing all moving, the British pound maybe is all right, not doing anything. All right. Now New York is open. The British pound US dollar is confirming the correlation between the euro and dollar and itself. Now it's going to follow the euro dollar. So the lagging price structure, we can use it on the hourly time frame. But if you are playing it on the hourly time frame instead of the daily chart, if you see a chart pattern on the hourly time frame, make sure that that chart pattern is at a key level on the daily chart, because you're on the hourly time frame looking for trading setup. Make sure that your trading setup is being formed near a daily chart key level. So what you are doing, you are connecting the key level of the daily chart to the hourly time frame at least, to avoid doing all kind of blah blah blah. All right. The same thing we were doing when we were using the daily chart for trading setup. We are using the key level on the monthly chart. All right. If you are swing trading using the monthly chart, you will use the key level on the yearly chart, or at least a quarterly chart, to link to the higher time frame. All right. So this is about, so you may see sometimes, I don't have one clear example here. So 20, which day is it? So we have a double top here for the euro. So in this case, if you are doing, you want to watch the time. It's very important. So the lagging is about the time. One is formed first before the other. One is running faster than the other. So because normally they should go down together and go up together, sometimes one is slow, one is lagging. The price structure of one currency pair is lagging to confirm, the positive or negative currency correlation. And as a day trader, we can take advantage of that on the daily chart or hourly time frame. So if you see on the hourly time frame, you break it down. If you are using the hourly time frame for the trading setup, you go to the 10-minute time frame for your signal, and then don't enter the trade on the 10-minute time frame. In that case, go to the 3-minute time frame. Will that be useful? All right. If you are using it on the daily chart, the lagging price structure, daily chart, hourly time frame, 10-minute time frame for day trading. So there is more for a lot of beginners and new trader to do. Learn to master how to use different time frame. There are videos on YouTube. You can YouTube search top-down trading method, multiple time frame trading method, different time frame trading method. You will see videos from 24 Stock Trader YouTube channel or Day Pro Trader YouTube channel when I'm speaking to you in my beautiful accent. All right. Okay, so this will conclude the discussion about the currency correlation, how to trade currency correlation. Like a pro, in this case, we want to use lagging price structure. I want to hold on, please. Let's see. This is the euro dollar. Let's see whether I'm going to see one example now to show you. This is on the 26th of October. Um, I can't see. What is my time now? The time of the day. We go to know the time of the day. Uh, the time normally should show at the bottom here. Am I missing something? All right there. Okay. So euro dollar, you see, form this double top here. And so at that point in time, if the British pound US dollar did not form double top at that point in time by doing something completely different, all right. And if later on, maybe that particular day or the next day, all right, that will be a lagging price structure. Sometime, be careful. Do not use the lagging price structures, all right. If you are using on Friday, be very careful. Sometimes you may notice the lagging activity on Friday. Be careful if you are trading on Friday. All right, be careful. So what you should do, sometimes you may see the lagging price structure on Friday, especially on the hourly time frame. And then you have to wait until London is open. Don't even trade it during the Asian session. All right, wait till Monday. So when you see on Friday, be careful. We see on Friday. Okay, say, all right, I've seen that. If you are trading, I'm not saying that it's impossible to trade in on Friday, but if you are trading on Friday, be very, very defensive. That's what I'm saying. Because sometimes you may see the lagging price structure on Friday, but the best time to play it is on Monday after London is open. All right. So the euro dollar may exhibit a bullish chart pattern. British US dollar may not exhibit the same bullish chart pattern on that particular day, on that Friday. And then surprise, surprise, Monday, the British pound will follow. The British pound US dollar may follow, all right, the euro dollar, which is the leading currency pair. I told traders that when we are talking about currency correlations, we are talking about leadership, and the leading currency pair is the euro dollar. The euro dollar is positively correlated to the Australian dollar, US dollar, British pound, Japanese yen, British pound, US dollar, New Zealand dollar, US dollar, Australian dollar, Swiss franc, okay, and all other currency pair that are starting with the euro dollar. But if you are playing this game with the euro British pound, all right, be careful. I do not recommend to trader to play the currency correlation with the with the euro British pound. We'll be talking about that in another video. This is due to hedging activities. So this is the way I want this video to be, all right? So I hope you have found it useful, and that probably this will help you to make excellent decisions, all right? So look for the lagging price structure, all right? And try to practice first. As always, you learn something new. You think, oh, Joe, this is very interesting. I can work with that as a day trader. All right. Practice, okay. Gain some experience, all right. And then before you go live, don't rush and do all sort of things, all right. All right, so this is it exactly on 26 British pound. US dollar was also it's not good one. You see, it was going down all this time. You see, it was going down. British pound, US dollar was going down before it bounced out. We didn't see a clear cut double top like the euro on that 26th of October. Okay, it's 26th of October. All right, it did not form a double top. You see, it went out from this. It's not a clear cut double top. But the point I'm making is that we want to see, all right, we want to see that the time, so the lagging is about the time. So the euro done it fast before the British pound US dollar is doing it. Sometimes you'll be surprised. The British pound US dollar will do it fast even before the euro dollar will do it. All right, so watch it. So you may see, for instance, the Australian dollar US dollar may exhibit a clear-cut bullish pattern, and then the euro dollar will be doing all kind of things. So one currency pair that is not in fact a leading currency pair sometime will take the leadership. So we print out a specific chart pattern, though it's not a leading currency pair, and then the euro dollar, which is a leading currency pair, will be lagging itself. And then the euro dollar will follow suit. Because of the influence of the economy news, sometimes you may notice that the leadership may change hand. So the euro is under pressure. The market will not be playing it, so it will wait. or the British pound US dollar is under pressure waiting for major economy news, all right, the market will not play yet. So one currency pair that is not under pressure may be taking the leadership, printing what is likely to take place. We acknowledge that. We do not rush. As soon as we see a confirmation that the correlation is now coming back, though one is already ahead and the other currency pair are lagging, either they are positively lagging or negatively lagging, we keep our eyes on the ball and we play it at one step at a time. Sometimes you may see that one currency pair may move during the London session when those who support to follow suit are not moving at all. Surprise, surprise. Now New York is open, other currency pair may move. I'm not saying that all of them will move straight away. And sometimes one currency pair may move on Friday and other currency pair may stay put. You say, well, what's happening to the currency correlation today? And then Monday or Tuesday, here they are following suit. That correlation that did not work on Friday, on the previous day, now is now established. And this is what we are talking about today, the lagging price structure. It's not easy for new traders to play the lagging price structure because it requires more attention, understanding what is taking place, so one can take advantage of those lagging opportunity. But very often, if one spot the best lagging price structure using currency correlation, usually it's a high probability trading setup for day traders, okay, in the forex markets, right? So this will conclude this discussion today about currency correlation, how to day trade using currency correlations like a pro part 2. So I invite you now to follow me in part 3, and I will be talking about how to combine economy news release and currency correlation for day trading purposes. So in order to master currency correlation, as I told you before, watch first the video that I titled Talking about Currency Correlation Trading Tactics. Even if you do not like my beautiful accent, watch the full length for that video, and then you understand more about currency correlation. And then you go to the next step, watch this the first part of this series of video, and then watch the full length of it, take note, and then watch the second part of this, and then watch the third part of this series of video. And then the next step, you like one particular strategy, all right? Now, use a demo account, practice. You're going to gain more experience. You're going to face different challenges. You're going to overcome them. You're going to ask questions, and then you master it, and then you start using it. All right? If you find this video truly useful, all right, give us the signal, thumbs up. You think this video is another useless garbage? All right, my friend, you put me under pressure. Give us the signal, thumbs down. If you think this is an essential tutorial, feel free to share with your friend on Google+, on Twitter, and also on Facebook. Until the next time, enjoy yourself and be very happy. We are the GSTW24 traders talking about currency correlations, how to day trade using currency correlation like a pro, a part 2. In this case, we are using a lagging price structures. Happy trading to you all, and speak to you soon. Ouais, c'est bon.